Mounting fears of a debt crisis spillover in Europe as finance ministers fail to reach a consensus on how to deal with the problem. Just what does it mean for Eurozone economies and the euro? This is Inside Story. Hello and welcome to the program. I'm Shakuntala Santharan. European finance ministers have met in Poland. Top of the agenda, how to deal with the Eurozone debt crisis. But the ministers are far from an agreement with ongoing divisions between the Eurozone countries and the European Central Bank. Something the U.S. Treasury Secretary Timothy Geithner warned could be very damaging. Peter Sharp has more.
Timothy Geithner, U.S. Treasury Secretary, on his way back to Washington. Job done? Well, not exactly. Geithner had used this unprecedented visit to warn Europe of the catastrophic risk of not taking decisive action to tackle its debt crisis. An unambiguous warning that was ignored by European finance ministers, who chose instead to delay until October a decision on the Greek bailout.
When I invited him, I wanted to show unity within the transatlantic family. I wanted Timothy Geithner to show us their American perspective on the problem and help him understand our internal problems.
What they got instead was what amounted to a dressing down from the Treasury Secretary. What is very damaging from the outside is to see not just the divisiveness in Europe in the broader debate about strategy, but the ongoing conflict between the governments and the central bank. You need both to work together to do what is essential for the resolution of any crisis. Demonstrators were back on the streets of Athens. Today, the international banking community, the target of this protest. Economists warn that the debt crisis left unchecked could quickly spread.
The urgency of the situation requires quick, coherent action, not only with regard to Greece, but also how you can contain the problems in Greece so that they do not extend to countries like Ireland and Portugal, or even by extension to Spain and Italy.
Greeks who'd hoped they'd get thrown a lifeline from the Eurozone finance ministers this weekend are left angry and frustrated. Peter Sharp, Al Jazeera.
To discuss the continuing Eurozone crisis, joining us are in London, Henning Meyer, a German visiting fellow at the London School of Economics. In Athens, Yorgos Kapopoulos, a commentator on European and international affairs on Greek state television. And in Paris, Clem Chambers, the chief executive of ADVFN, Europe's largest financial information website. Thank you very much for joining us, gentlemen. So if I could start with you, Yorgos, a crucial Greek bailout has been delayed until next month. Greek officials certainly incredulous about the decision. They've warned that they will be out of money by October. Are you surprised by this delay?
No. Everyone was expecting this delay because the government the last week has adopted new measures, new reforms, and it is logical. Our partners are waiting the beginning of the implementation of the reforms because the Greek credibility has been severely damaged because there is an impression or a certainty that it's one thing to adopt a reform, a decision and a law, and another thing the implementation. So it is very clear that our European partners are waiting the first steps of implementations. This is the picture, and there is no surprise about the delay.
Without this money, what does it mean for the people of Greece? Are they going to see more job cuts?
No, because this delay will not affect the functioning of the Greek state, the payment of public servants and people that benefit from social services, because the Greek state is continuing to issue short-term state bonds, and there will be no problem if everything goes okay, if the Troika mission in Athens signs it's okay. We are expecting the decision of the COFIN and of the Eurogroup to be ready at the mid of next October.
Okay, Clem, how close do you think Greece is to defaulting?
Well, the markets think that it's a certainty, but you know, there's defaults and there's defaults. There's a rescheduling, which is a technical default, and then there are proper defaults, like you saw maybe in Russia back in you know, '99. So you know, that's a broad range. I mean, some people say that it won't happen, but I think that the general tenor of the whole EU has gone from not it can't happen to if it does happen. So I think that that's a likelihood rather than a unlikelihood now.
Okay, so if and when Greece defaults, it can't pay back its loans. Henning, what would that mean? Would that mean Greece has to leave the Eurozone?
No, I mean, I think there's a big distinction between Greek defaulting or taking a haircut on its debt, which I also think is very likely in the near future, and Greece leaving the euro, which I think is unlikely and would cause a disaster in the Eurozone that would be uncontrollable, because it would trigger bank runs not just in Greece, but also potentially in other crisis countries.
How would that crisis spread, do you think? Because it's not confined to just Greece, is it?
No, but the thing is, just imagine Greece leaving the euro and reintroducing the drachma, say. Most people think that there would be at least a 50% devaluation against the euro. So old savings and other financial assets still in Greek banks would effectively be halved in value. And if Greece was forced out or went out one way or the other, I mean, how could you credibly say to the investors and to markets that if Greece does it, it won't happen in the case of Ireland, it won't happen in the case of Portugal, or even Spain or Italy? So there would be a potential danger that depositors in these countries would see the possibility of their country leaving as well and withdrawing their deposits and trying to get it into a more safe countries. So that's a distinct possibility if one country, and Greece seems to be the most obvious candidate, left the euro. So that's why I think it cannot be allowed, or it is against the economic interest of all the member states of the Eurozone and the European Union to allow one country to leave the euro.
Okay, but at this point, Eurozone leaders can't come together and reach consensus on how to deal with the problem. Why is that, Clem? Why do you think so?
Well, I think they're just showing that the European mechanism of politics isn't really harmonised enough. I mean, nobody's in control here. And in a sense, nobody's meant to be in control here, because this is not a federation, this is a loose affiliation of countries. So, I mean, it was said that Jacques Delors thought that the euro would be great because at some point it would start to collapse and then there would have to be more of a United States of Europe to stop disaster striking. And I think there's a certain view within the EU that if you let this get into a really parlous situation, i.e. in a lot more of a problem than it is now, at that point you can institute a United States of Europe, and this is the mechanism to do it. I think that's playing, dare I say it, Russian roulette. And I don't think everybody's thinking those thoughts, but certainly to really get out of this mess, it seems that there needs to be a lot more cohesion within the EU, and that's a cohesion that we're seeing over the last few days just isn't there.
Indeed. The US Treasury Secretary Timothy Geithner warning of the risks if the EU doesn't come together. The Eurozone finance ministers disagreeing with what he had to say, or ignoring what he had to say. Yorgos, does he have a point, though?
Yes, because I think that since the eruption of the financial crisis, after the fall of Lehman Brothers, we can see the United States and the European Union, mainly the Eurozone countries and mainly Germany, moving in opposite directions. For Germany, the priority is financial and fiscal stability and order. For the United States is quantitative expansion. So the two important Western countries are moving on opposite direction on how to manage the international financial crisis, and it is quite difficult to imagine how a consensus can be found on that. But in any case, we cannot imagine the United States to say as a neutral observer to what's happening in the Eurozone. For the Obama administration, the eventuality of the default for Greece, or even more important for Italy or for Spain, is a disaster scenario for the recovery of the American economy.
Henning, what do you think? How much of this disagreement has to do with politics?
Oh, it's clearly a sign that the European political leadership has been dysfunctional really over the last 2 years. I mean, this is nothing new. The political decision makers have always been behind the curve, always reacting to unfolding events and not taking a leadership role. But coming back to Timothy Geithner joining this meeting yesterday, I think he had a valid point, because everybody is worried about the debt situation, which is fine. But the key question is, how do you get rid of the debt in the medium to long term? And we've been trying austerity measures over and over again for the last 2 years, and with the rather predictable result, I have to say, that fiscal contraction is indeed contractionary, and it has a dampening effect on growth. And without growth, it is very hard to see, if at all, how you can turn a debt dynamic around. So we've seen it in the case of Greece, and this kind of debt spiral has also been observable in other places. So therefore, I thought it was a valuable contribution by Timothy Geithner to say, well, listen, what the Obama administration is now also doing in the United States, we have to focus on jobs and growth, because that's also the solution in the medium to long term to turn around the debt dynamics. Because the policy prescriptions we've been following so far quite obviously have not been working well.
Clem, do you think Europe should commit more money to try and fight the crisis?
Well, you can't go around saying we're not going to have inflation and then saying you've got to pump money into the system. You can't have it both ways. Now, obviously, if you're not going to cut down your budgets, if you're not going to start to try to run surpluses, God forbid we have any of those, then you've got to inflate it away, haven't you? So you can't have Germany saying no inflation, and on the other hand, you can carry on digging bigger debt holes. The only way to get rid of debt is to pay it back or inflate it away. That's a fact, right? And of course, yes, you can inflate it away. That's what America's doing. That's what the UK is doing. That's what Europe will have to do, and Germany is stopping that process because Germany is terminally scared of inflation. And in effect, inflation is a kind of default. Now, you've got to have balance of payment surpluses. You've got to have at least a neutral and fiscal budget if you're going to stop digging an ever bigger debt hole. All these countries, apart from perhaps Germany, are digging bigger debt holes. While they're talking about rescuing currencies, they're going further and further into debt. You can't keep going further and further into debt. America can't keep going further and further into debt. America tried it, blew up the world economy with the credit crunch, blew up Europe. This is their fault. And we are going to be blowing up America in return, because America has unsustainable debt balances, unsustainable trade balances. And that's the problem they've got to face. Their currencies have to be devalued so that they can compete on the world stage. If they don't, they'll just dig bigger and bigger debt holes until there's an eruption like we're getting now. You know, you can't go around trying to stave off the inevitable. And the inevitable result of governments sucking all the money out of their own economies, of borrowing money and letting their economies run at huge deficits in world trade, is exactly what we're experiencing now. Until they grasp the real nettle, this is just a tirage.
And the German
triage, I should say.
The German government has played the lead role so far in bailing out the Eurozone economies and trying to hold the bloc together. Are German taxpayers getting tired of footing the bill, Henning?
Well, of course, if it's portrayed like this, that you have to pay for other people's debt, if this is the way it is politically played, of course this is not something any national taxpayers would share. But I think it's also important to stress that there is spending and there's investment. And it's not just as if anybody was advocating just to open the floodgates and just pour more any kind of fiscal spending into the economy. But the markets have actually showed very clearly, with the interest rates on long-term debt for Germany, the UK and also the United States, that there is a very big scope for investing in these economies. And there's a very simple rule for investment. Any investment is good as long as the expected returns is better than the cost of capital. And given that the cost of capital for these kind of investment is so low, it's basically the markets crying out for this kind of investment. So it's not the case as if there is no scope for doing this. There are clear indications that it would actually be a viable way to generate some growth, and with the growth also higher tax revenues, fewer expenditure on unemployment benefits, and so on and so forth. So I think the scope is there, and obviously, yes, we've been portraying this rather wrongly, I have to say. When the crisis first became news, unfortunately too late, the discussion in Germany domestically was lopsided. It was basically a discussion about look, the German taxpayer is meant to pay for early retirement in Greece. This was never the case, but it was too long allowed to go on like this in Germany. What has happened is Germany, via other institutions, provided credit lines that were mainly used at the beginning to service the existing debt mountain, whereas the Greek population was facing austerity measures after austerity measures. So I think we are having a problem in Germany because the situation has been portrayed not quite as it is for quite some time now.
If I could stay with you, Henning, politics very much a part of this issue, the country facing state elections. How will all this play out for the German Chancellor and a coalition?
Well, the coalition is in severe trouble. I mean, the smaller coalition partner, the Liberals, have been in trouble for quite some time, and they're now trying to sort of present themselves as tough on the euro and tough on the euro rescue package, which I don't think will work for them politically, because it's actually risking the breakup of the coalition and potentially even early elections in Germany, which they would fare very badly in. So they're playing a dangerous game. So they had a change of leadership recently, and well, we'll have to see how this plays out, but it doesn't look good for them. Okay,
going back to the broader situation in Europe, Yorgos, do you think the Eurozone should keep struggling to try and stay together?
Because there is a very complicated question to answer, because we have internal politics, not only in Germany, but also in France. We have presidential election the next spring. We have early elections in Spain. We have a mainly political crisis in Italy, because we don't know what will be the day after Berlusconi. We have to see if the actual Greek government can sustain the political and social cost of very big austerity measures. The big question is not Greece. Greece perhaps is the example or is the field of experiment. The big question is if the Eurozone can prevent crisis in countries such as Italy and Spain. And the markets now are observing the Eurozone. If the Eurozone delays the implementation and the ratification of July agreements, if there is disagreement, if the European Central Bank or the EFSF can buy state bonds from problematic countries, the markets are going to understand that the political will that was demonstrated in the summit of the 21st of July is not very solid. So it's a question of substance, of institution, of credibility to the markets and of internal balances.
Clem, with the fate of the Eurozone hanging in the balance, how much trouble is the euro in?
Well, if you looked at the markets, you would say that the euro wasn't in a great deal of trouble, because the euro is still very strong. I mean, it's had a few rough days, a couple of rough weeks, but in comparison to where it was, say, 3 years ago, the euro is still strong, which says that the market isn't worried about the euro, which is kind of contradictory to the picture that we're seeing in the media and coming out from politicians. But you can't underestimate the impact of China here and the other BRIC countries, because they don't want to be in American dollars, because America is going the route of inflation very soon, just as the UK has gone. So they are hedged around the world. So all those trillions of dollars of US money that's gone out from America into the developing world has been hedged, and a lot of that is in the euro. So they've made a large bet that the euro is going to be fine. And of course, they're locked into that bet. They can't pull out of the euro in a hurry, so they're hoping that that hedge will actually pay off and not go south. So there's a lot of support through banks, through the casino capitalist route, that's hedged the dollar into the euro over the last 2 years, and these are vast sums. So the euro has been artificially held up by the developing nations who have got huge surpluses, hedging their dollar positions into euros. And you've seen that's the reason why the yen's so strong, that's the reason why the Swiss franc went crazy. There's a lot of currency hedging going on now. And of course, a lot of people in a lot of trouble with the euro. So what is really the big question is, when does this go to France? At the moment, the front line of this battle is in Spain and in Italy, and you can see the contagion just about breaking out in France now. You can see their banks big trouble, and the word is that they will have to be recapitalised by the government, i.e. nationalised or semi-nationalised again. And of course, that's the big story, because if it contagions into France, then it will contage outside of Europe and it will go to America. And America will get this contagion. There will be a strike on treasuries. People will not buy treasuries. And it could even go to Japan, where only the Japanese buy Japanese treasuries. But even they could start wondering whether they should put their money into government debt. So we could be at the very beginning of a huge disjunction here, where basically the markets, or the capital in the markets, will give up on spendthrift governments worldwide in the developed world, and there will be a large correction in the way that the first world does business socially.
Back to you, Henning. Do you agree with Clem that the repercussions could spread so wide?
Well, we obviously have spreading repercussions. I don't see it personally quite as gloomy as Clem yet. I don't see. I mean, it's to me it's unsurprising that the euro as a currency remains strong, because if you look at the Eurozone as an economy as a whole, the debt level, the growth levels, well, growth levels are going down everywhere at the moment. But if you look at the macroeconomic data for the Eurozone as a whole, it doesn't look that bad. We have asymmetric problems in some specific countries, because the political mechanisms to deal with such crises in certain areas of the Eurozone, in certain countries, are not there. So it's primarily a political crisis more than it is a macroeconomic crisis. So therefore, I'm not really surprised that the euro as a currency has stayed strong. And obviously, as Clem has said, I mean, there are other interests, outside interests, also involved in keeping the euro up. The key thing: how do you stop the contagion from spreading? First of all, I mean, if everybody's pulling out of bonds, they would have to go somewhere else, and the opportunities for safe investments are shrinking. So therefore, I don't think that we're going to see a massive shift anytime soon. And the question is how you turn the debt trends around. As I said, it's still manageable, it's still doable, but we've been pursuing the wrong policy, I'm afraid. And as soon as this realization kicks in, we can start to deal with the crisis. The second step would be, which is I would disentangle from stopping the crisis, how to reconstruct the Eurozone to make sure that something like this cannot happen again. But that's the second question.
Yorgos, very quickly, is it crunch time now?
I agree that mainly the crisis of the Eurozone is not macroeconomic but political, because you cannot speak about economic governance without legitimizing it by political union. And there are two opposing versions of possible political union in France. In Europe is the German version of federal Europe that was advanced some years before, reflected in the constitutional treaty that was rejected. And this is the French optic for political union, which means intergovernmental cooperation. So, in order to enforce politically the Eurozone, in order to have a center of coordination, the answer is not very easy. It will be a political union for the entire European Union, only for the Eurozone, on the German model, on the French model. It's a very complicated question, even on the political level, and even on the hypothesis that the internal political problems in many European countries are solved.
Last word to you, Clem. Do you think the Eurozone ministers will wake up and get over their differences?
Well, I think they're going to have to at some point. Someone's going to have to come out and take the lead here. I suspect it will be the ECB will come up with some kind of half euro bond idea, something that doesn't commit Germany lock, stock and barrel to bail out all the other guys. The thing you've got to remember is all these small countries that are having this trouble, they used the leverage of a semi-unified Europe to go far away ahead of themselves economically and blow lots more money than they could have possibly done with their own currency. And if they had their own currency, they would have been pulled up short a lot earlier. So now they had the euro, they ran away, they went crazy with the checkbook. And so there's going to have to be some way of restraining that going on, because in democracies, the people that make big promises about spending always get elected in. So there has to be a central way of putting these people in and yet keeping a unified currency. So that will come, whether it's going to come after the event, and I suspect it will, or before the event, which we're all hoping it will is yet to be seen, I think.
Right, we're going to have to leave it there for now. Thank you very much, gentlemen, for your time. In London, Henning Meyer. In Athens, Yorgos Kapopoulos, and in Paris, Clem Chambers. And thank you so much for joining us here on this edition of Inside Story. Your comments and suggestions are always welcome. Please do email them to us at insidestory@aljazeera.net. Goodbye for now.